Good morning and thanks so much for joining in. This is NDTV Profit. My name is Mathew and you're watching All You Need to Know. Over the course of the next half an hour or so, we'll catch you up with everything that you need to know to start your day on the right note. Let's start with the headlines. The S&P 500 touches the highest intraday level since January of 2022, closes just about 0.5% from its all-time high. All benchmark indices end in the green. Asian equities gain in trade with the Australian benchmark ASX 200 trading near its two-year highs. The GIFT Nifty indicates another positive start in India and trades above 21,500. Now, India's current account deficit narrows to 1% of the GDP in the second quarter, and that's led by lower merchandise trade and growth in services exports, which helps soften the deficit. The Adani Group promoters look to infuse 9,350 crore rupees into Adani Green. The funds will be used to deleverage and to fund a massive capex plan. And finally, tensions in the Red Sea flare up again with Houthis launching fresh attacks, and oil climbs over 2% overnight. It's trading flat at close to $81 per barrel mark right now. Now, U.S. military strikes in Iraq and fresh attacks by Houthi militants on shipping in the Red Sea were the latest in a series of events that have threatened to push the war in Gaza into a wider conflict. The Pentagon said late on Monday that its forces launched strikes on 3 installations in Iraq that are linked to Kataib Hezbollah. And Washington said that the Iraqi insurgent group that is backed by Iran was behind an attack that injured 3 U.S. personnel, leaving one of those in critical condition. And then on Tuesday, Yemen-based Houthi rebels, also backed by Iran, supposedly renewed their attacks on shipping in the Red Sea. MSC Mediterranean Shipping Co. confirmed that one of their containers, the ship that is MSC United 8, was hit while en route to Pakistan. It said that no injuries were reported in that incident, though. As of this morning, Brent crude is trading very close to that $81 per barrel mark. Remember, it has gained quite substantially from close to about $75 per barrel in the last few weeks. U.S. stocks, meanwhile, are in the midst of a Santa rally that has brought the S&P 500 to a whisker away from all-time highs, and the 3 major indices close about 0.5% higher or thereabouts. Now, in the Asia-Pacific region, you've seen quite a few of the early risers start positive. In fact, 2 of the 3 early risers, the Nikkei 225 was up over 1%. It continues to trade higher. The Hang Seng has given up just a little bit of its early gains. It opened about 1% higher. It is now trading about 0.75% higher, thereabouts. The indications are for a positive start in India as well. But let's take you through the major cues that you need to pay attention to from the F&O space. And we've got Samina joining in to give you the latest there. Samina, good morning.
Good morning, Alex. I'm, of course, stepping in for Agam, but very quickly we'll take you through what happened in trade yesterday. And Alex, very interestingly, while it was 26th of December, which is Boxing Day, there was no real fight on the street. The bulls were very clearly in control. The Nifty very slowly and gradually started the day on a flat note, finally went home with gains of nearly 0.5% to close at 21,441. What is interesting to note is that the markets have gained about 300 points on the Nifty in the last 4 days. So we recovered most of our losses from that fall that we saw on Wednesday in kissing distance to our recent highs of 21,593. That was how Bank Nifty played out. Remember, Bank Nifty's had a pretty solid series as well. It's up 2,200 points, so nearly 7% in the December series. So what you're eyeing is a pretty interesting and exciting monthly expiry on Bank Nifty. 0.5% on Bank Nifty is where we've gone home with. That's pretty much where the premium trades at, and you've also got open interest that was up about 2.5% on Bank Nifty. In terms of open interest distribution, you can see this on your screen. What we did see was the December series index itself has added 4.2% in OI, and my current rollover for the Nifty stands at about 52%. On Bank Nifty, it's a similar sort of picture. We aren't seeing too much change on Bank Nifty as well, where the Nifty Banks December futures have added 2.5% on that. Well, let's also take you through the other activity in terms of calls and puts. On the Nifty 50, I'll just quickly highlight what we've seen and where activity has taken place. Put writing was seen at levels of 21,350, 21,400 and 21,450, indicating that that's a key level of support coming in for the Nifty. On the upside, call writing is seen around levels of 21,550 and 21,600, indicating that that is where the markets will face some resistance. We do have expiry on Thursday, which means market participants are anticipating an expiry in the range of 21,350 on the downside and 21,600 on the upside. So if all goes well, you might actually see a new life high on the index as we close out the month. It's interesting, Alex, we've gained all our losses from what we saw on Wednesday, 300 odd points in the last 3 days. And what is, I think, heartening is it was a very steady move. It came in on good volumes. We started off flat, but finally closed the day with gains of nearly 100 points.
Certainly. Thank you so much, Amina, for bringing us those details. Let's turn attention to the Indian economy as well and talk about the current account deficit, which has narrowed to 1% of the GDP in the second quarter. It declined from 1.1% in the preceding quarter and about 3.8% from a year earlier. We've got Pallavi joining us to give you some perspective on what is leading to that narrowing of that trade gap. Pallavi, morning. What can you tell us?
Hi Alex, good morning. So like you've mentioned, the current account deficit has actually narrowed in Q2 of the ongoing fiscal year, and that's helped despite a rise in the merchandise trade deficit that's partly offset by a rise in services exports. So India's current account deficit has come in at a deficit of $8.3 billion, and that's about 1% of the GDP versus 1.1% in the previous quarter and 3.8% in the same quarter an year ago. Now, like we discussed, underlying this lower current account deficit was the narrowing of the merchandise trade deficit. That's come in at $61 billion, and services exports have grown by 4.2% annually. But what we also need to remember is that the capital account balance actually fell, and that was led by a fall in foreign investments, banking capital inflows and ECB outflows. As such, the BOP was broadly at near neutral levels. To be sure, what this does mean is that India's external indicators do appear fairly resilient and strong at this point. Normally, as a rule of thumb, we consider a figure over 2% of the GDP in terms of the current account deficit to be concerning, because then funding becomes a little bit of a challenge. So let's have a very quick look at some key pointers within this data. Private transfer receipts, essentially representing remittances by Indians employed overseas, came in at 21 billion. That's an increase of about 2.5% from the same period an year ago. Net foreign direct investment saw an outflow of about $0.3 billion. That's against an inflow of about $6 billion that we saw in the same quarter an year ago. Foreign portfolio investments recorded net inflows of about $5 billion. That's still lower than what we saw an year ago at $6.5 billion. External commercial borrowings, meanwhile, recorded net outflows of $1.8 billion. Broadly, going forward in Q3 of FY24, we do expect a little bit of a widening in current account deficit, and that's again primarily going to be led by the trends we've seen in merchandise trade deficits so far. Now, moving on to the USD INR, that's expected to continue trading with a depreciation bias.
Absolutely. All right. Thanks so much, Pallavi, for bringing us those details. Now, another key development related to trade. India has made its first ever payment in rupees for crude oil purchased from the UAE. India, remember, signed an agreement with the UAE in July for rupee settlement, and soon after, Indian Oil Corporation made purchases of 1 million barrels of crude oil from Abu Dhabi National Oil Company in Indian rupees. Some Russian oil also is being bought in rupee, and official has said that more deals may happen like this in the future. And of course, the Reserve Bank of India has also said that there is an attempt by India to settle more of its trade in rupees. But there's no target as to how much of this will take place. Of course, the major saving on the cost for India comes from not having to convert to dollar and from dollar, and that is essentially what the target of the government is as well. We have a lot of stock-specific information to bring you. We will bring it to you after this very quick break, so do stay tuned. Welcome back. You're watching All You Need to Know. It's time to tell you about the stocks that you have to watch out for in trade today. And we've got about 4 or 5 of them that are going to be top of the list today. We've got Mahima joining us to tell us about a few of those. Mahima, morning. What can you tell us about Kansai, Nerolac as well as Cupid?
Right, morning Alex. So Kansai Nerolac, the news is that it is set to sell a land in Lower Parel, Mumbai for approximately 726 crores. Now on 1st August 2022, the board had approved that it will sell off lands that are not being put to use. So basically they'll raise funding through this and use it for business purposes. Post that, in July 23, they also sold a land in Thane for approximately 671 crores. Now, we had recently had a MS note on Kansai which said that at present, Kansai Nerolac, they rated it as underweight and with a target price of 250 and downside of 24%. And if we talk about the overall share performance also, the stock has not been doing much. It has been down 3% in last 5 days. And if we see the YTD returns of the stock has hardly been up 11.5%. The analyst recommendations also for the stock are pretty much mixed. 11 say buy, 3 say hold, and 6 say sell. Now, talking about Cupid, Cupid Limited, Halvasia Group acquires another 26% stake in Cupid for approximately 113 crores via open offer. They already held stake of approximately 41.8% before this, and the The open offer was floated after they acquired the stake. If we talk about the stock performance, the stock has given stellar returns this year. The YTD returns stand at 260%, so it's clearly a multi-bagger for this year.
All right, and a couple of other stocks that are recent entrants to the stock market but have gained quite substantially could in fact see quite a lot of action in trade today, right, Mahima? There's Tata Technologies as well as Gandhar, okay. And that's because the anchor lock-in is ending today.
Correct. So, right, as you rightly said, the 50% of anchor investors' shares will be open, the lock-in period will be open today, and the next 50% for both these, Gandhar and Tata Technologies, will be open on 25th of February. Now today approximately for Tata Technologies 79 lakh shares will be open for trade. If we talk about the Tata Technology performance since the stock has been listed, the issue price was 15,500 and the listing price was 1,200, and the issue price, it was listed at 140% premium, and at present since the listing date the stock has gained over 0.23% only. Talking about Gandhar Oil, the Gandhar Oil equity shares that are set for sale today are approximately 44 lakhs, and the issue price was set at 169, and if we see the gains since the issue price on the date of listing was approximately 65%. However, the stock has been down 6% since then up till yesterday. So overall, if we see this today, we'll see that there will be some kind of volumes taking place in these stocks, and we'll see a lot of movement in the price as well because of this.
Absolutely. Thanks so much, Mahima, for bringing us those details. Now, in the recent past, we've seen a lot of action in the stock market on account of order wins, and we've got a couple of stocks that could see quite a lot of volumes in trade today on account of recent developments here as well. We've got Anushi Vakharia joining in to tell you about a couple of those developments. Anushi, what do you have for us?
Morning, Alex.
Morning.
So I come to you with 3 stocks. I'll start off with SJVN first. So SJVN has secured a 100 megawatt of solar power project for a consideration of rupees 550 crores from Gujarat Urja Vikas Nigam. So with this, the project expects to generate about 252 million units in the first year of commissioning itself, while if you look at the cumulative capacity generation, that is slated to be around 5,866 million units over the 25-year period. Now this, along with this, the company also expects a reduction in carbon emission of about 2.8 lakh tons. While this project is expected to be commissioned within 18 months of the signing of power purchase agreement. Now, if you take this order into consideration, the company's solar and wind portfolio now stands at about 5,090 megawatts, with a major chunk of it under the implementation stages. So second, we have Vishnu Prakash. Yesterday also, if you look at Vishnu Prakash Arpungalia, was in focus with the stock being up about 6%. So this is in context with the company receiving 2 water supply projects for rupees 899 crores from the Uttarakhand government in the Haldwani and Codeorg districts. This is the main focus, but if you look at the recent order wins, they have also received an order for rupees 175 crore for its railway project in Rajasthan in November, and another order of rupees 634 crore from the Madhya Pradesh project in September 23. Now, lastly, we have CIMEC, which has signed a MOU, which is Memorandum of Understanding for $19.2 million charter deals with HAL Offshore for its Sea Pearl and Sea Diamond vessels. Now, these vessels are slated for the deployment of ONGC contract, and the charter hire for which is around $8,750 per day. So this brings the 3-year charter cost to about $9.6 million. Now do note that HAL Offshore holds about 70.1% stake in CIMEC Limited. So if we can expect some positive impact over here, with the stock just being about 5% up year to date.
All right, thanks so much, Anushi, for bringing us those details. Let's talk about Tes Networks, which has gained about 40% or thereabouts in the year to date. It's had a pretty decent 2023, and the latest update is that MK has initiated coverage on the stock, and it's expecting 30,000 crore revenue in Tes Network over the next 5 years. Varsha is joining in to tell you about what is going to lead to that. Morning, Varsha. What do you have for us today?
Good morning, Alex. So as you rightly said, MK has initiated coverage on Tes Network, and it rated buy with a target price of almost 1,050. Now it expects Tes to execute orders of rupees 29,000 crore over FY24 and 25. FY28. And if you see in Q2 FY24, Tejas has an order book of almost 9,000 crores. Now, further, MK also expects Tejas bagging some more POs over the next 2 years, and it expects revenue of almost 30,000 crores over FY24-28, with a peak revenue of rupees 10,000 crores in FY25. Now, if you see, this revenue increase has been led by BSNL and BharatNet projects. Also, Tejas is expected to benefit from your government emphasis on domestic manufacturing. Then you have got PLI schemes and also large spends on BSNL and BharatNet and railways. And also Tejas will also benefit from the cost competitive R&D versus peers, its asset light model, and also CEO's Anand Athre's US based experience. And the biggest benefit would be Tata Group's semiconductor foray could also be an added boost. Also, it expects margin of around 20% over FY24, 25-28 as the scale picks up.
All right. Thanks so much, Varsha, for bringing us those details. Tes Network, one to watch out for in trade today. Now, Equities Securities has initiated coverage with a long rating on Protean eGov Technologies. They expect new businesses to drive growth going forward. And Mika is joining in to tell you about what exactly they're saying in their note. Mika, what can you tell us about the company and, in fact, what the brokerage is saying?
Good morning, Alex.
Morning.
So yes, they have initiated a coverage with a long rating at a target price of 1,500, which implies a 24% upside to the current market price. Now, Equities sees Protean as a play on the rapid digital transformation in India. Protean has a significant presence in its traditional business with the PAN card issuance segment, and it has two-third market share in this segment. It's also been diversifying into new segments of e-commerce, healthcare, education on the open digital ecosystems. And apart from this, the key shareholder has been a key contributor to the open network for digital commerce. So Equities expects the new business of ONDC, the cloud, and the international expansion to drive growth. It expects a revenue CAGR of 26% over FY23 to 26 and a net profit CAGR of 28% over the same time period as well. With respect to the EBITDA margins, the brokerage does forecast the company to touch 20.9% EBITDA margins by FY26, and this is versus 15.9% in FY23, and this is mainly on the back of as the share of the PAN services segment declines, and this is the lowest EBITDA margin business of the company. Now, the brokerage is betting on the strong management, the strong free cash flow record that the company has, and its limited revenue share from the government, and also the probability of being a unique play on the developments around the India stack.
All right. Thanks so much, Mika, for bringing us those details. The problems for Byju's seem to be escalating, with the latest development being that its educational coding arm White Hat Junior has been taken to court in the US by not-for-profit firm Codeorg over non-payment of dues. Rishabh Bhatnagar is joining in to give you the latest details here. Rishabh, I believe $4 million was the original contract value, of which about $1 million was paid out, but the rest is in limbo.
That's right, Alex. Another legal quagmire that Byju's finds itself in. Another issue that highlights the working capital crunch that is underway there. Let's do a quick run-through of what we know from the complaint that Codeorg has filed against White Hat Junior. The two entered an agreement effective January 1st, 2022. White Hat Junior was supposed to pay around $4 million to Codeorg for using its platform and content for its educational courses here in India. As per the complaint, White Hat Junior did pay about $1 million, but then said that it cannot pay the rest, $3 million that it does owe to Codeorg. And that has led to this material breach of the agreement between the two parties. Codeorg has asked the court for relief in terms of the financial damages that it has suffered. It has also alleged that despite this breach of the agreement, White Hat Junior has continued to use Codeorg's platform and content for selling its educational courses here in India. So another issue that we're seeing emerge from that Byju's group.
Thanks so much, Rishabh, for getting out the latest details on Byju's. Now, here's a bit of an update. It's not the latest update, of course, but it is a roundup of all of the action that you've seen in the primary market and what action it has been in the second half of the year. Around 36 IPOs made or hit the Lal Street between September and December of this year. My colleague Saloni Kothari has more details in this report.
What a year it was in terms of companies making their stock market debut on the exchanges. Some 57 Indian companies raised around rupees 49,000 crore through main board IPOs in 2023. While most of the action was seen in the second half of the year as 36 IPOs came on board from September till December. Talking about some of these top IPOs during the year, we had Mankind Pharma in terms of issue size, which raised over rupees 4,000 crore, launched in the first half of the year. We had Tata Technologies, which was the much awaited and the much talked about IPO, as it was from the Tata Group after a decade, raising around rupees 3,000 crore. We had JSW Infra as well, coming from the JSW Group, raising around rupees 3,000 crore. IREDA, a government-based firm, government selling stake, that raised around rupees 2,000 crore. Some other IPOs that kind of made the headlines were Cello World, which raised around rupees 1,900 crore. Now its competitors Flair Writing as well as Dom's Industries were also the ones which floated their IPOs this year. However, in terms of issue size, Cello World raised the highest. We had Honasa, which was Mamaearth's parent company, the new age startup, which raised around rupees 1,700 crore. And we also had Inox India and Sami Hotels, which raised about rupees 1,500 and 1,400 crore. Now, talking about how these companies have been doing as far as their market price is concerned, many of these firms are actually trading above their issue prices. For example, Tata Technologies is up about 40% from its listing last month, and then IREDA, which hit back-to-back upper circuit after it got listed, is up about 70% since its listing. Talking about the most subscribed IPOs during the year, the names differ from how it was compared to the top list that we saw right now. We had Moti Sons Jewellers, which was launched last week, subscribed over 170 times, and the IPO got listed this week. We had Plaza Wires, which was opened during the first half of the year, subscribed over 160x time. We had Utkarsh Small Finance Bank, for that matter, and we also had Idea Forge Technology and Dom's Industries getting over 100 times subscription, given the kind of demand and interest that we saw from retail investors as well as non-institutional investors. Then we had Aeroflix Industries as well, which was about 97x, and Happy Forgings and Senco Gold also making the list of top subscribed IPOs during the year. 27 firms have already obtained the green light from the market regulator to float their public issues to raise around rupees 29,000 crore. Another 29 companies are awaiting the regulatory approval from SEBI, involving a cumulative fundraise of about rupees 34,000 crore. So there's a lot to watch in the space during the next year as well.
All right, and a lot to watch in the secondary markets as well. You'll find all of that right here on NDTV Profit. Do stay tuned for that. We're completely out of time on this edition of All You Need to Know, but up next is India Market Open. Do stay tuned.